So how did the last lesson go? Were you able to look at support and resistance maybe in a different way? Were you able to improve maybe the way you look at charts? Do you find that it helped for you? I hope it did. And now we will take a look at another concept or another tool. It's Trendlines. And Trendlines, as the name suggests, they describe trending phases. So here's the Trendline tool. We have used it already to make sense of swing highs and lows. And a trend line is, for example, in an uptrending market, you look for at least two swing lows, you connect them, and then you try to find more connection points. So you can see that when we just extend this trend line, it seems to be quite nicely explaining the market. And the first rule is that in an uptrend, you connect the lows. In a downtrend, you would connect the highs. And then you can see we need two trend lines to start drawing a trend line. We need two touch points to swing lows. And then once we get our third touch point, the trend line is confirmed. And this one has 4 and 5 touch points. So the general idea of a trend line is that you can use it in two ways. First, you look in an uptrend, you look for swing lows that really reach the trend line. Again, you trade that as a pullback, so you can see the market is going up, then you wait for a move lower, you see that the trend line is holding. We can even combine that, the previous swing low is holding, and then you can initiate another long entry to get into the trade. Here again, you can see it seems like even here, very nice confluence. You can see the previous swing high is acting now as support, very nice confluence, and here as well. And then another way of how traders would use a trend line is that they look for a break of a trend line. So for example, here at the top, you can see here the market is breaking the trend line. You've probably seen it. We are also making a new swing low. At this point, we have already made new swing highs, lower highs. So the trend direction was already shifting here a little bit. And then once the trend line is broken, it can give the signal that the market is rolling over from an uptrend to a downtrend. And then you can start looking for short trades based on the different signals that we will cover. Pullbacks are again another important one. You can see that, oops, zoom back in. When a previous swing low turns into a resistance, for example, but we will also use moving averages later on. And then you can see we have this downtrend here, which then continues to the downside. And this is then how a trend line can be used for finding trend following trades, but also for finding those periods where the market is turning. Let's try to look at a few more examples. And here is an example of a so-called bump and run pattern. So you can see we have a nice slowly upwards moving market, and then suddenly the market just bumps higher. It takes off from this trend line, and the market is accelerating the trend direction. And then you can see we can even draw a new trend line. Oops, we should make that accurate. Starting from the swing low, and you can see how strong is this new trend line. You can see the angle is increasing significantly from a slowwards moving market with a slow trend line to a very fast higher moving trend line. And this is called a bump and run pattern because this market is moving so strongly that it becomes unsustainable, and then traders will look for reversal signals, look for ways to get short. You can see even before the trend line breaks, it often happens that you can see, or with the break of a trend line, that the swing highs and the lows are already shifting. So this is a very interesting confluence here together when we take highs and lows together with the trend lines. Maybe one more example. So you can see we have an uptrend. Let's see how we draw the trend line. And it is okay if the candle wicks here penetrate a trend line. That's not too bad as long as you don't have a full close below a trend line. It is still active. And then you can see we can find pullback entries into the direction of the trend. You can see here we have the first, the second touch point. Then we would wait. How do we get another one? In this case, we would try to add another confluence factor. So here we have a pullback, does not quite reach the trend line, but I'm pretty sure with other tools this could have been identified as a pullback pattern. And then you can see we can probably even draw another trend line here. You can see that we have a few snaps. So trend lines are not always going to work out on your charts. Not every trend will be able to, you will not be able to describe any trending phase with a trend line. That is totally fine. We have enough tools in our toolkit that we will explore so that you can make sense of almost all the market phases. So if you don't get a good trend line, don't force one. That is very, very important. If you don't have a trend line, just don't use one. Use the other tools that we are covering that you will learn. You can see here we have a nicer trend line, another bump and run pattern, 1, 2 touch points, here the third one, and then the market takes off, makes the bump pattern, and here you can see at this point something is changing here in the market direction. We have our highest high here, then we have our second low here, and then once we break the trend line here, we can already see first we have a bump and run pattern, but you can also see that we are already making a lower high. Once we break this level here, you can say we are making a lower low. We come back into this level, make a pullback, and then start this huge sell-off. So this is a very nice example as well, how we can use trend lines here. Another one. We have a trend line, one touch point here, second touch point, then here we have another one here we come close. So there are ways how you can use a trend line to look for touch points, to look for pullbacks. And then you can see at this point we break the trend line, but just look at what happened previously. We can see before a trend line break, it already seemed like the market was turning here a little bit. So you can see the market was already making higher lows at this point, and then you can see we don't start a strong uptrend, but at least we were able to find a way how to exit if we were short here such a trade, when we see such clues that we not only see the market is making higher lows, but we also see the broken trend line. So multiple clues signal here the end of the trend, and then you can use your other tools. And then we have another pattern here, which we will cover in the next few videos, where we look at pattern trading. So if you want to get a little bit of a hang with using trend lines, I would again recommend pull up charts. Try to look for trend lines where they make sense. If you can't get a trend line on your charts, don't force it. Look at another way of looking or making sense of your trends by using highs and lows, support and resistance. Trend lines can be a great tool if you can draw them. If you feel like, oh, this is a little bit forced now, then step away, try to use another concept. We do have enough tools in our toolkit. And then I will see you in the next video.